Have you ever looked at the stock market and just wondered, how did all those companies get there? How does a simple idea turn into something that millions of people can buy a piece of? Well, today we are going to pull back the curtain on that exact journey. I mean, really think about it for a second. Every huge company you know, whether it's in tech or manufacturing, started somewhere. Many of them started as just a tiny little idea. So what's the magic formula? How did they make that incredible leap from a garage to the global stage? And just to give you a sense of the scale we're talking about, here in India, there are more than 5,000 companies listed on the stock exchanges. That is a huge number of businesses that have all gone through the very process we're about to dive into. So, how did they all do it? You might think every story is totally unique, but there's actually a surprisingly well-defined path, a kind of playbook for going public. And that's exactly what we're going to break down right now. You know, when you really get down to it, it all boils down to one thing. One single, powerful motivator that pushes a company to go public. And that's an absolutely insatiable hunger for growth. See, a company doesn't go public just for the bragging rights. It does it because it's growing so fast that it needs a massive injection of fuel to keep that fire going. A fantastic example of this? Just look at the story of Reliance way back in the 1970s. Just look at these numbers. In only a few years, their sales more than doubled. That is absolutely explosive growth. And to keep that momentum, to build more factories, to reach more people, they needed money. A lot of it. And that is exactly why they launched their IPO back in 1977. Okay, so that's the big picture reason. But to really truly get it, let's make this personal. Let's follow a fictional founder and see exactly how they raise money step by step on their way to a big IPO. All right, let's meet our entrepreneur. Let's say she has a fantastic idea for a t-shirt company called XYZ Tees. Right now, it's just an idea, but she's got huge plans. First things first, she needs some cash to get it off the ground. Now, a company doesn't just jump straight into an IPO. Oh no, it's more like climbing a ladder. You start small, on the first rung, often with what's called seed money from people you know. Once you prove the idea works, you climb to the next level, professional investors. And only then do you reach for the top rung, the public. So that very first bit of money our XYZ Tees founder raises, that's the seed money. This is the cash from, friends and family that lets her buy that first run of t-shirts, build a basic website, and just prove that, yes, people actually want to buy her product. And what do you know? XYZ Tees is a hit. Orders are flying in, but that initial seed money is long gone. To really scale up and meet the demand, she needs a lot more capital. And this is when she turns to the pros. Venture capitalists, or VCs, who invest in stages or rounds as the company gets bigger and bigger. Okay, let's fast forward a few years. After several successful funding rounds, XYZ Tees is now a national brand. The founder wants to go global, but that takes an enormous amount of money, way more than VCs can typically provide. So it's time for the final step. It's time for the initial public offering, the IPO. Now, the whole IPO process can sound super complicated, but we can really boil it down to these 5 key steps. You start by hiring the experts, the investment bankers. Then you write the company's life story, you go out and market it, you figure out the price, and finally, you have the big launch, listing day. This document, the red herring prospectus, is the absolute heart of the IPO. Seriously, think of it as the company's ultimate no-holds-barred biography. It's a massive document that lays out everything an investor could possibly want to know. And when I say everything, I mean everything. The company has to put all its cards on the table. Its financial records, who's running the show, what the competition looks like, and, this is a big one, all the things that could potentially go wrong. So, once that official biography is filed, it's time to sell the story. The company's leadership team basically goes on a marketing tour called a roadshow. They travel around, meeting with big investors and building up excitement for the IPO. Okay, so how do they actually decide on the share price? Well, they don't just pull a number out of thin air. They set a price range, a price band. Then, in a process called book building, they let big investors bid, saying how many shares they'd buy at different prices. This is how they gauge the real demand and find that perfect final price. And done. The price is set, the shares are sold, and our company XYZ Tees has successfully raised millions. The IPO is complete, and now a brand new chapter begins. Life as a public company on the open market. Now, this is a really, really important distinction to understand. The IPO itself, that happens in what's called the primary market. It's the one and only time the company sells its shares directly to the public and gets all that cash. Every single trade after that, all the buying and selling you see every day, that's the secondary market. That's just investors trading shares between themselves. The company doesn't see a single rupee from that.
And then you have listing day. The moment the market opens, XYZT's shares are officially trading. For the very first time, the price isn't set by bankers. It's set by the raw forces of supply and demand from millions of people all over the world.
So there you have it. We have followed the entire journey, from a simple idea for a t-shirt all the way to a publicly traded corporation. We've seen how it got here. But really, this is just where the story starts. Now that it's on the market, what makes its stock price zig and zag every single day? Well, that's the constant unfolding drama of the stock market.